Hello and welcome to Off the Fence, a podcast where we deconstruct difficult decision making to try to figure out what keeps us stuck and, more importantly, how do we get unstuck? I'm your host, Karen Covey, a former divorce lawyer, mediator, and arbitrator, turned coach, author, and entrepreneur. With me today, I have Stacey Ellison, and Stacey is a certified divorce lending professional and divorce mortgage planner with over 30 years of experience in the mortgage industry. Since 2020, she's used her specialized training to help individuals navigate the complex financial decisions surrounding a home during divorce. Working with other divorce professionals, Stacey provides strategic guidance on home equity, mortgage qualification, and housing goals. Her goal is to help divorcing homeowners make sound financial choices that support their long-term financial stability. Stacey, welcome to the show.
Thank you, Karen. Thank you so much for having me. I'm so excited to be here.
I am thrilled to have you because I want to talk with you about a really hot topic these days, which is mortgage assumption. Since interest rates have gone up so much in the past few past year, 2 years, whatever it's been, it seems like
Yeah,
forever.
it seems like forever. You're
It
right.
really does. And it doesn't look like they're going down anytime soon. So a lot of people are curious about mortgage assumptions. And so let's just dive right in and talk about what does it mean to assume a mortgage? What is a mortgage assumption?
So, a assumption is when one spouse or one party legally takes over the obligation of the mortgage, and allows the vacating spouse to do whatever they're going to do, whether they're going to buy a new home or move out or whatever it is. Um, it There are actually two types of mortgage assumptions. There is a simple legal transfer assumption or an assumption by novation. And these two types differ basically in the level of lender involvement and whether or not the original spouse remains legally responsible on the loan or not. And a lot of people don't realize that there are, in fact, two different types of assumptions.
Okay, let me stop you there. I mean, I was under the impression, probably wrongly, as it's turning out, but I was under the impression that if you're going to assume a mortgage, the whole reason for doing that is to get your spouse off the mortgage, right? So if
Yes.
I understand you right, there are mortgage assumptions that don't do that.
Yeah, that's correct. That's correct. And
Okay.
so it's really important. It's really important to understand the difference. And this, like the name says, the simple legal transfer assumption is a little bit easier because the existing loan remains in place and the assuming borrower or the spouse who's staying in the home takes over the payments. But the other spouse may still be legally responsible unless they are formally released by the lender. And this is often, like, to do this, it's often, a lot quicker than getting a full release, but it can leave that vacating spouse open to a lot of responsibility, because if the mortgage doesn't get paid on time, it's still going to get reported to their credit. They could still be held responsible when they move forward to get new financing. There's a lot of potholes to be aware of with that.
Okay, so help me out here. I can't see any reason on earth to do that. Why would anyone do that?
Well, the assumption by novation is a lot more complicated and can take a long time to have to get done, and there's no guarantee that the lender is going to approve it. Um, it Assumption by novation creates a new contract between the lender and the assuming borrower. And while it does release the initial borrower from the liability, the the borrower who's assuming the loan, they have to qualify for it. And each lender is going to have their own guidelines as to what the qualifications are. It's not traditional underwriting guidelines. They can make up whatever guidelines they want. And
Okay,
while,
let me interrupt you here. So it sounds like of those two types, the assumption by novation is what people typically think of when you talk about assuming a
yes,
mortgage. Am I getting it?
that's correct.
Okay,
100%.
so if I'm, let's say, I'm the in spouse, I'm staying in the house, I want
Mhm.
to buy out my spouse's interest or whatever. I want to be responsible for the mortgage, let him go his own way, right? So let's start with the basics before we get into what kind of an assumption is it? Presumably, I and my husband already have a mortgage, and the reason I want to assume it is because I want to keep the good interest rate that I got years ago, right?
Sure,
So,
sure.
is every mortgage assumable?
No. No, it's not. And I'll come back to that, but let me back up and address something that you said. You said you wanted to do an assumption and an equity buyout. You cannot do that. If you are assuming doing an assumption, there is no additional money coming out at that time. If there's going to be an equity buyout, that's going to have to happen outside of the mortgage and be equalized with other assets.
Okay,
The
so what you're saying is that if, let's say, I'm the spouse who wants to buy out the mortgage, so to speak, or buy out my spouse's interest.
Mhm.
What I'm hearing you say, and you tell me if I've got this right, is that if I can assume the mortgage, and we'll get to that in a minute, but let's say the mortgage is assumable, and I want to do that, and I have, let's just say, hypothetically speaking, $100,000 worth of equity in the house, I can't take 50,000 out, give the 50 to my husband and assume the original mortgage. Is that what you're saying?
That is 100% correct. You cannot take any pennies out because assuming the loan is not only preserving the interest rate, it's preserving those original terms and conditions, the loan amount, and the interest rate and all of that. So you cannot take money out during an assumption. And
So what I'm hearing you say is that if I'm the person and I want to assume the mortgage and my spouse has got $50,000 worth of equity that he's, entitled to under the terms
Mhm.
of the divorce settlement, I have to pay him some other way.
Absolutely, Karen. That's exactly right.
What can I pay him with?
Whatever other assets are being divided, so it could, I mean, if you have a stock account or different, maybe the asset division isn't 50-50. Then it's 50, you get 50% minus whatever equity you're going to use to buy him out. So and this is what I do as a divorce mortgage planner is we look at all of the options. What's the benefit? Is there a benefit to assume the loan? There are a whole lot of reasons why refinancing even to a higher interest rate could be less expensive than doing an assumption.
Okay,
So,
tell me about that. What are those options? Because those are the ones I want to hear about.
all right. Well, every situation is different and unique, right? But when I work with someone, we look at what their payments are currently under the current loan. Um, we discuss, and I encourage them to talk to their accountant because when you get divorced, you go from filing your taxes jointly to either head of household and single. And the deductions are dramatically different, the standard deductions. So going from married to head of household or single is going to lower the standard deduction. So going to a higher interest rate could mean you would save more money itemizing your deductions rather than taking the standard deduction. And the after tax cost of the money, which is a whole conversation that financial planners and accountants are really, really good at. I just like bringing it to their attention. I don't give tax advice, I don't give financial advice, I don't give legal advice, but to understand the true cost of doing an assumption, very often it I've seen instances where it saves people money and saves them cash flow and lowers their taxable income by doing a refinance as opposed to staying in that 3.5% mortgage.
Okay. But maybe I'm missing something, but isn't the divorce going to change their marital status, their tax filing status, no matter what? So
Yes.
how would it be better for them to have a higher interest rate than a lower interest rate? I'm still missing that point.
Okay. So with the higher interest rate, you're obviously paying more mortgage interest annually. Okay.
Mm-hmm.
And I've got spreadsheets and I've got my divorce mortgage planning report that calculates all of these numbers. Um, but by lower, so the standard deduction of for this coming year for married is 36. It's have it here. It's like just 30, I'm sorry, $32,200 is the standard
Okay.
deduction. For a head of household, it's 24,150, and for single, it's 16,100. So if the mortgage interest paid at the lower rate at 3.5% is below that 16,100, then you would take the standard deduction,
You can't
right?
itemize.
Right. If at 6%, and I'm making up numbers because I'm not
Right,
running them
right,
right
right,
now,
right.
but let's say you pay $18,000 in mortgage interest, right?
Okay.
Because you're increasing your loan amount for the buyout and going back to the 30-year term, which means the payment is mostly interest. You're
Mm-hmm.
then exceeding that standard deduction. And by itemizing, and this is, and I'm just talking about principal and interest and property taxes, and everyone is different in terms of what you can and can't deduct. So you got to talk to an accountant. But just increasing the mortgage interest part of the what is allowed to be deducted can lower the taxable income. Again, I'm not an accountant, so like you got to talk
Right,
to an accountant
right.
about, but it works out, and I've seen it because my report does it for me, and I share it with the accountants and with the financial planners and with the attorneys, that it could actually save people money by refinancing to a higher interest rate because they're changing how they're filing their taxes. Does that make sense?
Yeah, no, that does make sense. So, what I'm hearing you say is that if it turns out that your loan isn't assumable, all may not be lost, right? There,
True. Well, yeah, true. So, and I'm sorry, I never addressed your question that you asked, are all loans assumable? No, they're not. Um, by contract and what's written in the mortgage note, FHA loans are assumable and VA loans are assumable. But what has happened is that Fannie Mae and Freddie Mac are now acknowledging that divorce is a life event. And many investors are allowing the loan to be assumed, even though, according to your paperwork, if you go back to your original paperwork when you got the loan, it's going to say it's not assumable.
right.
Okay. But however, it's totally up to their discretion. They can make up any ratios and any qualifications that they want. And sometimes the loan's assumed, but they change the terms. So you might not keep it's crazy. They might not keep that exact interest rate. I've heard cases of that happening. So there's a lot to unwrap with assumptions. And the other thing is, an assumption can take up to 8 months. So if you're going to explore an assumption, and there's no guarantee that it's going to get approved, you also want to make sure that the settlement agreement has a plan B. What if it doesn't go through? You don't want that spouse who wants to keep the house be forced to sell it if they can't get the assumption completed in 120 days, because you're not going to get it. Very rarely is it going to get done in 120 days. And you want to give them the opportunity to look at a refinance if the assumption doesn't get approved without varying from the timelines of the settlement agreement.
Okay, so I'm again confused because if I've got mortgage documents, the original mortgage documents that I and my spouse signed to get this house,
Mhm.
um, how do I know if those documents can say this loan is not assumable, but maybe it is assumable, how does anyone figure that out? How can you, if you're wondering, is my loan assumable, how do you find that out?
You have to call your servicing company. You have to call the investor
Okay,
and find out.
so,
So,
and that's whoever your current mortgager is?
mhm.
Because I know a lot of times people will get a loan from company A and then
And it
company A
gets, yeah.
sells it, right?
Mhm.
And now you're paying company B, right? So
Correct.
you would call company B, whoever is your current servicer, and say,
I'm
I'm
getting
looking,
divorced.
I'm getting a divorce, I want to refinance.
Nope. I want to know if my
Or
loan is assumable.
I want to know if my loan's assumable. That's right. So, but let me stop you there. Is there any downside to letting your lender know that you're getting a divorce?
No, because um, divorce is so in the mortgage paperwork, um, there is a due upon sale clause. Okay.
Right.
And the Garn St. Germain Act prevents that clause from being activated in the event of a divorce or a change in title. Okay. So they cannot, if you call and say, hey, I'm getting divorced, I want to assume the loan, they cannot then be like, oh my God, we're going to call your loan due. That's illegal. They cannot do that. They don't have to allow the assumption, but they cannot force you to pay the loan off just because the title is going to change because you're removing a spouse from the title. Does that make sense?
Yep, that makes total
Okay.
sense. So the next question is, so you find out that your loan is assumable. Yay, good news. But then how do you know whether you qualify? Because correct me if I'm wrong, but you still have to qualify, even though you're on the original loan. If your
Yes.
spouse is coming off, you
You
have to
have to
be able to
qualify.
qualify for that loan. And what do you need in order to qualify?
Well, every lender is different. First of all, you're not going to be able to find anything out until the divorce is finalized, which, yeah, they won't do anything until that spouse is being removed from title. Um, and at that point, again, because you want to make sure that the settlement agreement has a plan B, a contingency plan in case the assumption is not approved. And that the navigating through this process, because it can take up to 8 months and
Hmm.
it's not fun and it's not easy. Um, as a certified divorce, as a divorce mortgage planner and CDLP, I help people navigate through that. And I can act as an advisor and review their paperwork and help them fill out the application and make sure that everything is in line. Otherwise, you don't know what you're submitting. And God forbid you submit something that an underwriter doesn't need to see, and it can open a can of worms. And, so having someone to guide you through that can be very helpful. And that's something that I do as a divorce mortgage planner.
Okay, so let me go back to something that you said though, that you can't start this until the divorce is final. What if you and your spouse agreed that you were going to keep the house and you had just an interim court order that said, party A gets the house, party B is out, and you want to change title then, can you then start the assumption process midstream?
I don't know that answer to that question. I haven't had
Okay.
that situation. My guess is that that would be up to the lender, but honestly, I'm not 100% sure of that.
Okay.
So I don't
So
want to.
because what I'm concerned with is a lot of times people, if they can't, if one spouse can't assume the mortgage, you absolutely need that plan B, right?
Yes,
And
absolutely.
so it would be very helpful to know that while you're still negotiating, because then you can negotiate. You can say, look, assumption didn't happen, couldn't happen. They rejected us for whatever reason. Um,
Well,
Now
I
we got
believe,
plan B.
yeah, but my understanding is that it's similar to, like, you can't refinance to take someone off title until the divorce is finalized. You can't do anything really until the divorce is finalized. And that's where divorce mortgage planning comes in during the process, is to make sure that at the end you're putting your best foot forward, whether it's applying for an assumption or setting up for refinance, whatever is needed. But there's really the assumptions is a lot unknown until you get into it. And like I said, it can take 8 months and then not be approved. I've seen, I haven't had it, but I know someone who had a case where the debt to income ratio was like in the 30%, like, and they would qualify for any mortgage program,
Mm-hmm.
but the lender said no.
And do you have any recourse as the borrower if the lender says no, is there anything you can do about it or you're just stuck?
I mean, you can reapply, I mean, you can go back and try again. And maybe it was something that, maybe something changed. You could, I've heard of, people who have gone back 2, 3 times before it did get approved. But you're talking, if it takes 6 months, 8 months every time, what's that time
Yeah,
range?
yeah, that's
So
a crazy amount of time. But what if, so let's say somebody wants to apply to assume the mortgage. I assume that there are qualification standards, like you have to have a certain amount of income coming in. And alimony and child support can be considered income. But can you remind me again of what are the rules regarding that?
sure. For any mortgage application, when it comes to alimony and child support, they have to meet the test of stability and consistency. So the rule we use is called 636. There has to be a 6 month history of receipt and a 3 year continuance. And that's for alimony and child support. Plus, you have to meet documentation standards. We have to show that the alimony has been received or child support has been received as ordered. So if it's due on the first of the month, it's got to show as clearing on the first of the month. If it's $1,000 a month, it's got to be $1,000 on the first of the month, not $200 this week, $300 that week, $500 the next week. And yeah, they've paid $1,000, but it's not as ordered. So that's very important. Um, it also, and if they pay by check, that's easy. If it's by electronic transfer, that's easy to document. One stumbling block that happens is if someone doesn't, if the paying spouse doesn't want to transfer money directly to the receiving spouse and they open a joint account and then the receiving spouse takes it from there, in essence, they're paying themselves the alimony, and that's not going to work. So, again, having these
Interesting.
conversations up front and making sure that you're setting the expectations for what's acceptable and what's not acceptable during the settlement agreement process will make the mortgage process easier at the end, whether you're going for a refinance or an assumption or whatever it is.
That makes total sense. And what I want people to also hear implicit in your statement that the payor has to pay as ordered for 6 months means you need a court order on the front end, right?
Yeah.
So at some point, hope, even in the middle of your divorce, you got to start that 6 month time period ticking.
And that can start with temporary orders.
Yeah.
If temporary orders are in place, and it doesn't matter if those temporary orders are not for the same amount as the final order, it starts the clock ticking. And once the divorce is final, you only have to show one payment at the final amount. But
Okay.
the temporary orders can get that clock ticking, and that can be a big help when someone needs to do that refinance sooner rather than later, or
Well,
buy a new house sooner rather than later.
whether you're talking refinance or you're talking assumption, if they're going to require that 6 months of payment, um, doesn't it would make sense, or I think it would be important for people to start those alimony payments in the middle of the divorce, because if you've got to wait 6 months for payments and then wait another who knows how long, 6, 8 months for the assumption to either go through or not, I mean, you're talking that's well over a year.
Yeah. Yeah. And if the now here's the thing, and the biggest objection that I hear from the vacating spouse is I need my name off that mortgage so I can qualify to buy something else. That's not necessarily true. If there is specific language in the settlement agreement that that mortgage payment can be eliminated from the vacating spouse's debt to income ratio. But
Okay,
again,
what specifically, now you've got my interest peaked. What
Mhm.
specific language are you talking about? What does the settlement agreement have to say in order to keep the spouse who's leaving the house, in order to keep that mortgage from showing up on their debt to income ratio if they want to buy a house?
well, that's something that I discuss with the divorce uh, team directly when I'm
Hmm.
hired. So,
Okay.
but it is specific language um, that underwriting will accept to not have to count that mortgage payment against the vacating spouse.
Is it the same language for every company or does it vary company to company?
Um, it it I think it has more to do with the state laws
Oh, interesting.
and underwriting guidelines. So there's a lot to it. I can't give you one blanket statement.
Okay.
So it
And you mentioned a little bit already, but can you explain your role in a mortgage assumption? Because I know if people want to refinance, they find a mortgage lender, a mortgage broker, they go, they apply, they do their thing. But when you're assuming a loan that already exists, you don't need a broker because you're not looking for a new mortgage. You're trying to assume the one that already exists. So, what's your role in helping people do that?
My role is to help explain the process to them, to get to work with them and with the existing lender to more of a consultant on how to file the paperwork, what the time frames are, what keep them on track in that regard. Not, obviously they've got to be the main contact with the lender, but they can give permission for me to talk to them and answer questions and that kind of and just kind of consult them through the process.
So, if I'm understanding this right, you're like a liaison between the existing mortgage company and the person who's trying to assume the mortgage.
Yeah. Mhm.
What else, if somebody is interested in an assumption, what's the first thing they have to do? Like
Um,
what should they be looking at to know, like, how do I even dive into this?
um, the first step would be to find out if their lender would allow the assumption,
Okay.
and then talk to me.
Okay, so you get involved right
Right,
from that
yes.
very beginning. Do you ever get involved earlier, like you're calling the mortgage company and saying, "Hey, can so and so assume a mortgage?" Or that's
They're not going to talk to me. There's privacy laws. They're not like I could call and like unless I'm the borrower, they're not giving me any information whatsoever.
okay,
Um,
got it. So first the
yeah,
borrower has to call, say, "How do I give permission to this person?" And then the mortgage company will talk to you.
exactly. Yep.
And who gets you involved in a particular divorce case? Is it the borrower themselves, the couple, the divorcing couple? Is it the lawyer? Is it a financial advisor? Who brings you in?
Like I have people finding my website, finding me on Divorce Lending Association, finding me on Divorce Girl Smiling, um, and they reach out to me directly. I also have referral partners of family law attorneys and mediators and financial planners and other divorce professionals that refer people to me. So how it depends. I get people many different ways.
So I guess what I'm hearing you say is that if you are the divorcing couple and the lawyer says, "Hey, you need to get a professional involved here in the loan assumption process," they need to listen and they could go to you.
Yeah. And honestly, if someone comes to me and says they want an assumption, I do a whole divorce mortgage planning report as part of the process to look at all of the options because it is quite possible that it will cost less money and give better cash flow and take less time to do a refinance. It's not always the most cost-effective process to do an assumption. And I'm going to look at their long-term goals as well as their immediate goals and make sure that whatever they end up doing, give them all the options, but make sure that whatever they do is going to meet their long-term goals. Because what's the point of going through any of this if in 6 months they're overwhelmed and they can't afford to keep the house and you end up selling it anyway? So,
Right. That makes no sense. But you know that what you just said sparked another question in my mind to I know if you want to refinance a loan, you've got to pay a fee, right? You go to the company, there's an application fee. Is the same thing true in assuming a loan?
there can be, there can be fees. Yeah,
So so it's not like,
the lenders are going to charge fees. They need to make money. They're not going to do anything for free. So yeah, they're going to charge you, and it can vary. It could be tens of thousands of dollars.
wow. So it sounds like it's complicated. And this is a process.
It's very complicated, which is why you need a divorce mortgage planner.
I definitely can see that now. You have shown me the light, as they say.
Or have I just
So,
confused it more, confused the issue more? It's hard to tell.
I really appreciate all this information. And if people are interested in working with you, first of all, do you work with people across the country or only in certain states?
As a divorce mortgage planner, I can work with people in any state.
Okay. And so if people are out there, if someone's saying, yeah, I need to figure this out, and clearly I can't do this by myself, where can they find you?
You can go to my website, which is divorcemortgagesolutions.biz. You can find me on Divorce Girls Smiling as a trusted advisor. You can find me on the Divorce Lending Association website also and find a CDLP. That's divorcelendingassociation.com. You can find me on Facebook. You can find me on Instagram. I'm all over the place.
Yeah, yes, you are. And for those of you who are watching or listening, all of those places will be linked in the show notes. Stacey, thank you so much for being here and sharing all your pearls of wisdom.
Oh, thank you, Karen. It was a pleasure. Thank you so much for having me.
You're welcome. And for those of you who are watching or are listening, if you enjoyed today's episode, if you'd like more to hear more episodes just like this, do me a big favor. Give this episode a thumbs up, like, subscribe to the podcast, subscribe to the YouTube station, and I look forward to talking with you all again next time.